welcome back to the Nobel Show. Hope you missed me as much as I missed you. Been very busy over the past few days, so we're actually going to kick this episode off by sharing a few little announcements and things I've been working on. So first of all, we're going to go over is our new Nobel Trading newsletter. So this is for people who they don't like using Discord. I know there's a few of you out there, but you still maybe want the weekly insights that I give for people in the Discord. So you can get that there. And that also includes, here, we'll do a little description here. So this is every Sunday evening, and I include economic data points that we should be looking out for, earnings calls that I'm looking for. I provide some extra commentary on those frequently as well, and a quick briefing on my current market sentiment. Now that's for subscribers only, although occasionally I'll go ahead and post market insights and also some of the lessons, probably straight out from the Discord in there as well, or just if I see something particularly interesting and I want to rant about it, I'll put it in there. I'm using rant pretty liberally there, not like an actual angry rant, but the next announcement is I revamped the Spacing Out podcast. I did some episodes, got some feedback on it, sat back on it, gave it some thought, and so we redid how this podcast is, and you could read in the read about here. This is now also on Spotify and Apple Podcasts. The Substack will get it first. The other ones are connected to the RSS feed here, so sometimes they're a little delayed, and so these will go directly to your box if you want to sign out here. This is completely free, whereas the newsletter is intended to be a different subscription service for people who do not want to use the Discord, and so this, you can just check it out. I just did an episode actually on things that help new traders, and if you check out the YouTube short I uploaded, you can see a highlight of that. All right, anyways, now let's talk about the market. So we'll hop in here, the YouTube topics, and then I'll kind of go over the market a little bit. So let's see what we got going on in here. So, and should I go here? Maybe I should go like down here. Now let's go over here. I don't even know why I felt the need to move that. All right, so coming into this week, we saw the global markets declining. And remember that China is closed right now for New Year's. They closed from Tuesday. They'll open back again next week. At the same time, Beijing Olympics is going on. That is something I actually included in our weekly briefing. We've kind of seen that play out. All the headlines have either been pretty good sentiment or just, not much going on. In general, during the Olympics, everyone's playing nice. We did see some interesting news with Joe Rogan around Spotify. Spotify has new restrictions for Joe, and he also took down some podcasts where he said some things he kind of regretted. It's just an interesting topic around free speech, and also in the sentiment when it comes to the social media companies. People are getting a little sick of the censorship that's been rampant and the blocking of free discourse, and so we're actually seeing continually people kind of looking for alternatives. And speaking to that, Rumble Video offered Joe $100 million to leave Spotify and go to them. Rumble's really interesting. We have a Rumble. If you check them out, you can find some of our content there. I'm even putting the podcast there if I could talk. And the stock's really interesting too. I just making a note of course, someone always knows a bunch of front running here before the news drop on a stock that's usually very stagnant and has nothing going on. The actual letter they sent him, will he actually leave Spotify and go to Rumble? I doubt it. I bet there's some consequences built into the Spotify contract, and they're not going to break the contract with him just because of a bunch of artists that actually are invested in indirectly by Pfizer. Funny enough, is interesting. I guess I won't get caught up on that, but it's interesting if you dig into it, and not conspiratorial. That's just the facts, just following the money. All right, so Amazon is increasing its base pay cap to $350,000. This is, probably majorly in response to a lot of the other tech companies raising salaries for people, keeping up with the inflation, and trying to keep their workforce. As many people are leaving their jobs right now, they want to be able to work from home. They want more flexibility. There's a bunch of open jobs in the market, so these companies need to continue to step up, be more competitive to keep their talent. So it's good for Amazon that they're doing that. Of course, this company has so much in profits that spending more on keeping your talent is because it's kind of shocking they don't do stuff like this sooner. They have to wait until it's a must, until the competitive market tells them to, because they could easily pay people even more than this and not really matter to their books. U.S. Secretary of State Blinken, the U.S. and the EU are working together to protect energy supply from supply shocks caused by the Ukraine crisis. This is in relation to gas issues, especially for Germany, who didn't want to close down the new gas line that they're putting together and in cooperation with Russia. Now, Germany is a special case because they don't want to use nuclear energy because they're backwards and stupid. Unlike France, who's doing just fine, doesn't care, because they're utilizing technology. That's pretty much how that boils down. So the U.S. is not. Also keep in mind, the U.S. is trying to stop Germany from working with Russia, but we have no active participation in the deal with Russia. And we don't even really have any way to incentivize them to do that other than, hey, you're my buddy, right? So just keep that in mind, that if push comes to shove, Germany could easily just turn around and say, okay, we are going to continue to work with Russia. We're not going to punish them for not working with Ukraine because it hurts us too badly economically. So just be aware that could play out like that, and the relationship that exists between these different political entities. So Jack Dorsey joins the board of Blue Sky, which aims to decentralize social media. This I think is kind of bearish for Square, which is now Blockworks. He's gone back to being the part-time CEO. I think that company stock should be doing a lot better than it is, but I think investors are already frustrated that he's gone right back to working on another project. Now, as far as personally for him, I think it's a great move. I think it's a really interesting space. This is a decentralized social media, and if Jack Dorsey's on the team, I think the people under him at Twitter are really what held Twitter back, but he was the main reason Twitter blew up in the first place. To see him step up and take a project on to work on, I think is really interesting, and that could be a really cool project to follow. But as far as investment-wise, this is not a public company. This is not like some sort of SPAC, and I think it's really bad for his other company because it's very clear that his attention's pretty attached to this space, considering that he went straight from Twitter to over here in a matter of less than a month. So, all right, moving on. Pentagon spokesman said, Russia continues to add significant forces along its border with Ukraine. We've been getting continual updates of this, and Ukraine has also responded with running their own drills on pretty much on the other side of the border. And as a display of force or preparedness, I guess, just political moves. Peter Thiel has left Facebook board and moved to Truth Media. This is really interesting. This is the early investor with Facebook. He's one of the members on the All In podcast, and he's a very active person, and he's probably one of the more likable. Should I say likable? If you were a left-leaning person or more of a Democrat, he is probably one of the people that you're more okay with having an affinity with Trump. Boy, that was wordy. But that's kind of the way I look at Peter Thiel. And it's interesting because Truth Media obviously is the Trump social media, and he was very open about it being a political decision. Which I thought was very interesting. Peter's someone who's very forthright with his values and what he thinks, and he acts on them very openly, which I think everyone witnessed when Chamath Palihapitiya said that he didn't really care about the genocide that was occurring in China. Now, obviously, there's some more context to that, but Peter Thiel was pretty much very adamant with him, and the internet was quick to side with him. That was some drama that occurred a week and a half ago now, but continuing on. And that's just important just for like the social aspect of investment in China. I'm just trying to kind of keep an eye on the parameter of where that sits with these Chinese stocks, because I'm expecting a bigger push away from Chinese investments and for politicians to say invest here in America and see that social push play out. And we just really haven't. People just don't care. They're caught up on other things. So at least for the time being, I don't know if that will persist. Putin says if Ukraine joins NATO, European countries will be drawn into military conflict. This is, just a very forthright threat from him. And of course, we're going to see some more headlines on that. So we'll just touch on that more in a minute. Ukraine and Russia playing, and I already touched on that actually. I didn't realize I was in here. The Peloton issue. This hit the news. When Peloton first had that insider report, I don't remember which magazine put it out, but the CEO basically came out and he was like, well, we're not cutting a bunch of jobs and completely halting production. I'm still thinking about it. And that's not what he said. He used a bunch of corporate language to make it sound like, yeah, everything was fine. And immediately I was like ringing the alarm bells like, this is just awful, and what he said is just complete nonsense. And sure enough, now he's leaving. Layoffs, cost cut, there's some rumors of a buyout. Nothing's played out. And remember my comments on the changes when it comes to both buyouts, and I think I forgot to mention that it also applies to mergers. Just in case I haven't mentioned that yet, keep that in the back of your mind. That it's very unlikely we see a big tech company buy this out, especially if it's not Microsoft or Google, who get to ride under the radar a little bit more when it comes to scrutiny. Which that might change with YouTube and the big push, and Rumble being the YouTube competitor. All right, next thing. Oh yes, the $4.5 billion crypto attempt laundering. Yeah, next. This is just funny. It's just laughably stupid by this couple, and I just totally butchered that title because I was reading this URL like a moron, but. I'm not going to get into this into too much detail. I don't think this affected cryptocurrencies. I don't even think that the news has really affected cryptocurrencies. If you were watching Bitcoin today, it trended with the S&P just on point on every minute tick. So I just think that that's just there's a tight correlation there that sometimes diverges, but then on really volatile days it seems to recalibrate to one another. It's interesting. Home buying. So the home buying sentiment for new younger customers has been hitting lows, especially among the youth. I mean, this is crazy to look at. The fact that this was already looking ridiculous in 2021, and now in 2022 it's just lows that we haven't seen in a long time, honestly. And that's just because prices have continued to climb, and I'm pretty sure we'll run into some more data on that, so I'll kind of hold back a few other comments until we get to that. But people are still buying. So the big thing that's going on with here for why that we're still seeing high sales when the sentiment is this bad is because we're seeing lots of corporations and also pension plans buy housing. Now the pension stuff could be tied to the fact that a lot of financial experts are worried about how these pension plans hold up, considering that the older population has more needs than the smaller, younger population, who, and that older population is supposed to live off the taxes of the younger population. But if they have more needs, especially with all the healthcare issues and rising healthcare prices and inflation and and there's a fear about asset prices and financial stability, suddenly you need to, buy property. So this really outcompetes the average person, though, who would like to own a home, because, these pension plans can just go out, pay all cash, get the deals done quickly, and also have a much easier time borrowing money if they need to. So it's just concerning to kind of see that. I think that's enough touching on that. Biden talk. Oh yeah, this was a Biden smoke on, what day was this? Will this tell me what day? Okay, I'm going to start putting the days in the future. So Biden wants to invest in supply chains at home. There was a big focus on the semiconductors. He's expecting to create thousands of new jobs. He's kind of bragging about this and also wanting to raise wages. Two things there. One, raising wages for that specific sector of jobs is actually probably just going to incentivize automation or robotics. And two, we already have more jobs than we can fill. There's more open jobs than people are actually unemployed. So, and these are more technical jobs. So it's even questionable on whether this is even beneficial at all, or even a need that the economy is looking for. So that's worth mentioning. But he did finally mention Tesla. Took a moment to hype them up. And just personally, I feel like I take naps more hype than this president. But he finally did mention them, the number one American company and the global leader in EV technology, finally got mentioned by the president, who didn't invite them to the EV conference last year and 2 years ago. So it's the first time he's mentioned them. We've even seen petitions signed by tens of thousands of people. An outcry of, why are you ignoring the company that we love the most with the guy that's most beloved? And I think it's jealousy. I mean, everyone, he's very anti-government. He called Biden a wet sock puppet, and rather than being a leader who isn't emotional about sixth grade name calling, instead the president decided to act like a stubborn, passive-aggressive child and then exclude Elon from all major conferences that he had earned every single right to be a part of. Like him or dislike him, there's a certain point where you need to step up and give respect where respect's due, and not, I'm not staying on that too long, but it's just ridiculous. So irritating to see that our leadership can act so blatantly childish and just a lack of emotional control. On the White House on Wednesday, Biden wanted to host CEOs at the White House. I didn't see anything additional on this. I thought that might be interesting. I thought we might see some different news follow that, but we haven't really heard anything, probably because they all sat down and said, why are you talking to us? You're lying about all the economic data and you're not doing anything to help us, so you're not going to listen anyways. But maybe this is related to the supply chains, and it's important to note that them constantly taking reports on the supply chains and collecting data, most of the issues that they can actually control and solve are super easy to solve and should not need states who already have their plates full with their own problems to solve to get involved with collecting that data, which is not a top priority for them, which is something we've talked about before. So it's just, that ended up being a nothing burger. China fell short of promises it made to purchase American goods. This is part of the trade deal that Trump made with China. They were supposed to purchase an additional $200 billion in goods, and they did not at all. When Biden was asked if he was going to do anything about it, he basically said, yeah, and nothing came of it. So, no hard backbone with China. And no consequences for not holding their word whatsoever. So that's not good, because you cannot let these countries push you around. So that might lead to issues in the future. And if you want to read through that, it's 91 pages long. I was kind of going to take a closer look at it. I did not. This is interesting. Nikola had a bunch of issues, pretty much same as Peloton issues. I would say a little bit worse. This company looks like they're going to go out of business at this point, because they had their director of supply chain and purchasing leave, the global head of supply chain leave, and the director of purchasing leave. So this means that their supply chains are, well, as quoted here, is in shambles, and that is probably extremely accurate. I'd be cautious of this one. I've never advocated for this company. If anything, GGPI was one that we're interested in. We saw some good movement today. That was cool. But yeah, that's really interesting. This is some interesting data to definitely take a look at about China's trade takeover in Africa. We've also touched on this subject of how much focus China is giving to Africa and how good Africa's economic growth has been. Some of these countries are some of the fastest growing economies in the world right now. And a lot of that's actually been driven by digital currencies and digital payments as well, the DeFi. And China's definitely taken interest with them and doing a little bit of bullying there as well, like they did with India, or continuing to do with India. Oh yes, inflation data to show high year-over-year figure. Yeah. We already got that data economic point in, so we're aware of that. Super Bowl ads, Oh yes, crypto companies spending big on Super Bowl ads. We saw the same thing last year, and we saw all the cryptocurrencies rally on the excitement, especially Dogecoin. I think XRP was another big one. XRP's been outperforming actually most of the cryptocurrency market if you've been paying attention. Something I actually called for in the in our 2022 predictions video, which I'm glad at least a few things from that video are playing out, because we did not get the bullishness overall that I wanted, but we are seeing that the payment-based coins are outperforming the broader market, which I did expect some diversion there, and it's kind of playing out. Bullard. All right, Bullard's comments today. So we saw this market movement today, and actually let me go ahead and pull that up on we got the 5 minute here. We'll pull this over. And we got, actually, we'll pull it to 15. So this movement today, CPI came in a little bit hot, so this sold off. We saw a technical bounce here. Looking back, and even if I come back here, I'm fairly certain I shared this. Holy cow, I just made myself lost. Maybe it's down here. Yes, retail investors bought 1.7 billion, second highest amount on record. I feel like that rally was all retail, chasing a technical bounce, and then Bullard came in and obliterated that out. I imagine that this opened down and call holders sold the bottom and then probably ate it on this drop, and then got burned again here. So it was a rough day. If you look at the social media activity, it's dipped a lot, and I'm thinking people were stepping away a little, burned on this crazy movement today. But remember, and I've reiterated this over and over, and I said yesterday before we got this on Twitter and TikTok and in the Discord a bunch, even if we rallied on the CPI and it was mediocre, I still saw more downside in the future. It's so essential that you understand the macro environment. I saw lots of people saying that you for sure should trade into, no for sure anything. The only thing for sure is more downside in the future. There's no reason to trade into a heavily tense economic data point. That's silly. So that happened. Moving on. So Bullard did two things. One, he said 100 point increase, which is 1% increase to the interest rate by July 1st, which will be the largest since 2000. Market reacted to that. That was the first drawdown that we saw, and then we didn't see that the market agree with him on that, but we did see a 50 base point increase get priced into the market, and yeah, we'll touch on that more in a moment. The other thing that more extended drawdown that we saw heading into the day was fear over emergency rate hikes. Now that's extremely unusual. We usually only see emergency rate cuts, and so this was the potential for a hike because they are feeling that they really need to hammer down hard on inflation. And if you're conspiratorial, it's because someone had puts and he needed to help them out. And that's actually my local Fed president. I'm out in St. Louis, and so Bullard's out here too. That happened. I almost immediately. Oh, and let me just mention, it's really important to take everything that different Fed members say with a grain of salt. Unless it's Jay Powell saying it in an actual Fed conference, just kind of understand that when Bullard says this, that he's just a piece, like a very small fraction of what the actual opinion is. So, that's a narrative he's pitching that's battling against a bunch of other narratives. And we already saw a bunch of other Fed members speak out against this, saying that was too aggressive. Some even saying that they don't see a need for that type of urgency. Market seemed to partly agree with him. So market seems torn on or finding a middle ground between all the Fed outlooks. And there's a 75% chance of a 50 base point March hike, which I think is actually even higher than that. So, although we've seen some pretty substantial bond movements in the after hours. So we'll see how that kind of plays out over the next few days. We're going to need some time to process that and let the narratives play out. So this was interesting. The Securities Exchange Commission Chairman Gunsler mentioned giving activist investors less time to report in positions, which I think is really cool. Given the technology that we have today, and by the way, he seems kind of stellar. He's been pretty up to date with crypto. He's been pretty informed on the technology. He's bullish on it. He wants adoption. He's pushing for some sort of a national cryptocurrency, and even doing changes like this, like, hey, we have the technology for these people to report their trades immediately. Why do we still give them 60 to 90 days to report that information? It seems kind of silly. So I think it's cool that they're doing that, and I wish they would have done something sooner for the constituents of the government. But nonetheless, I think it's good it's finally happening. This was the other home buyer information that I saw. And remember this, home buyers' monthly payments are up 25% to a record high. I think it's good to mention that most of that demand is not actually hitting the consumer, because the consumer is not the biggest buyer of the houses, and we've seen that by the data, by the sentiment data. And even though we're still seeing record buying, it is questionable how much of this is hitting the consumer, although the rental prices are going to hit consumers, and those rental prices are going to trend with these increase in mortgage payments. People paying more monthly for their mortgage, they want to make a profit on the rental property, they're going to raise the rent higher than the mortgage. Now, there could be some lag in this, which we saw kind of last year during the hype. Even as early as 2020, we started seeing that, where different areas like Texas and Ohio were having their rates, their mortgage rates outpace the rentals, which is rare, but is symptomatic of how dramatic the housing market is right now. Does it seem like a bubble or some like 08 situation? No. There's a lot more integrity in the loans. It's just odd to see that play out the way it is. And like I iterated before, I think it has something to do with the demographics and pension effects and corporations. All right. Whispers of an emerging Fed hike. We talked about that. We talked about retail investors going in big. Yes. Okay. So most Fed officials have commented on opposing a 50 base point hike in March. They think is a longer series of 25 base point hikes. I don't think I threw it in here, but I think Goldman in particular was pricing 725 base point hikes. I would anticipate two things here. One is this: companies are beating on sales estimates. Now, there's a little bit of a game of expectations because there was a lot of downgrades, and then we beat the downgrades. So is it still super bullish? I'm not sure. It doesn't seem sustainable, especially when inflation's up, 7.5%, and wages are down. So the consumer has less to spend. They have less savings, and prices are going higher. So this looks like it could be indicating that there is some, whatever percentage it is. I wouldn't say it's the majority percentage, but I would say that it is worth mentioning that there is a chance that the economy can handle these interest rate hikes. And I've heard some people argue for it. I haven't particularly shared that sentiment with that outlook, but it's something worth mentioning that we are continuing to beat sales. The economy is still continuing to show some strength. And when you look at how many jobs there are, and maybe if employment gets even lower and we start filling those jobs, maybe there are some signs that these supply chains are starting to resolve themselves a little bit. Like I said earlier, there's a lot of issues that could be easily solved. So the government would step up and handle that in some way, shape, or form. That would be good as well. So interesting perspective there. At the same time, I'm worried that, let's say they don't do one big hike and they try to actually do a longer series of 25 base point hikes. I doubt we finish all 7. Even if the Fed comes out and says that is what their intention is and that's what they're trying to do, I doubt that they play that out, because my thought process right now is that what I originally said, inflation's high, prices are rising, consumers have less to spend on goods, and then you see this lack of demand that will eventually bring prices down. But throughout that time period, remember, this will take months and months and months, maybe even a full year to play out. But over that time period, I'm thinking we're going to hit some sort of dead period where companies will start missing, the consumers won't be spending much, and we might have to pull back on those interest rates because we hiked them up into a slowing growth in the economy, and the inflation, that supply demand effect would have naturally resolved itself no matter what, through the mechanics that I just said, where the prices rise, the consumers have less to spend, they stop buying stuff, the supply builds back up because there's no demand, and then everything finds a nice equilibrium. And even though it would naturally find its way there, the Fed then steps in and says, oh, hey, we're going to hike interest rates super high and make borrowing more expensive, which is I didn't share it in here, but we had another economic data point about, record highs in promissory notes, which is, corporations offsetting payments in the future. So, even more debt accumulating. And so, that if these interest rates affect that even more. So that's good to keep in mind. So, and traders are very short the Russell 2000. And that's, I just think, symptomatic of the fact that these high debt companies are going to get hit the hardest when we start raising interest rates. So it's no surprise to me that there's a lot of shorts there. And I think there's a lot of shorts in general. I've been short this whole time. What's shocking to me is how bullish retail is. I guess I just don't look at social media enough. And, in the podcast, I touched on this. The rampant call buying and anyone being super bullish right now at this time period Now, long term, I'm always bullish. Long term, I'm a perma bull. Even though I hate using this terminology of bearish and bullish, technically I'm a perma bull who sometimes has bearish sentiment, or I would just call it I'm just realistic. That's how it is in my head, but that's just what I'm thinking right now. I think that we'll likely see some sort of recovery, or maybe even increase in volatility as these narratives kind of pick up. Although, like we saw here, the majority of Fed officials didn't agree with Bullard, even though he moved the market pretty good. But keep in mind that most of your big money and smart money is short right now, not long. But we could see the crypto, the Super Bowl kind of pick up the cryptocurrencies as well. So there's a few things at play. There's some interesting stuff right now. As far as trading goes, I put out that video about uranium. Literally next day, we were up 50% on our options with CCJ. That played out great. And we won on Disney. That was nice. We went ahead and set up some small earnings calls today. And I think I already mentioned past trades we've done and updates on that. I was going into today, I was accumulating cash. I sold the rally yesterday, heading into today. Same reason. I don't like trading big into economic data points. Heading into out from here, I set up some more short-term puts and some calls on different earnings or high conviction stocks, and did some nice pair trades there. Just to kind of see how the market plays out. I'm thinking volatility can continue to build. It's important to note that we have the Fed minutes on the 16th, and then in March is when we'll actually have the conference. So keep that in mind. We'll get some sort of outlook trajectory on the 16th, which will be a big day, and actual changes won't come until March. So whatever trend develops from here will most likely be persistent until then, and I think that we'll probably see some sort of lean into that will probably kind of match this series of 25 base point hikes. Now, if there is more of a political push, which I think there could be, because remember, most Fed officials have opposed this, but remember how hawkish Powell was. So even if they do the series at 25, I don't think they get all of them in. And I want to hear, Fed minutes, but I am kind of, in the back of my mind thinking about how hawkish Powell really was and how much that political push might start to come in. Of course, Biden's continuing to talk about food companies causing inflation, which we did see a big hike in those food prices. But remember, energy prices have been persistent, which tends to make steel persistently high, which tends to, the cascading effects of that. Grain becomes high, then food becomes high, then it's terrible. And remember that the persistent inflation energy prices can entirely we caused that. So if that's anyone's fault, it's the government's fault. And just remember that. So when they're blaming food companies or they're blaming anyone, they're just literally just trying to pass off as much blame for as much stuff as humanly possible. But at the end of the day, they've been extremely incompetent in how they've handled all of this. So that's what we're saying. That's my outlook. I think we could see some relief. Long term, still bearish. Still think we can see more lows. I think a lot of these companies with high debt are going to get murdered. And I think now, in the long term, we could see we could even see talks of a recession playing out next year. So just keep that in mind. I think when we see those headlines, it will be around the time that we see the lows, if those play out. So when everyone's the most terrified, that's probably the low. And then, will be time to go long again because markets melt up and because I still think we're the greatest country on earth. So, and I still think we have the strongest economy. And China's been quiet right now. So and the political, the environment's been a little bit better. Macron been talking to Russia, and they've kind of worked some things out. So could see some quiet period, maybe some more speculation on the narrative, but that's what I've got on my mind right now. Hope you found this helpful. I hope you like the new format. These videos are a little longer now, which means I probably won't do as many. So probably once a week you'll get a video like this though. And I will continue to fill out this chat with topics through the week. And then every week we'll do a long version of a video like this. So let me know down in the comments if you like this. If you like this deeper dive. Should I do them twice a week with a little less content in them? Or do you like this format best? Go ahead, let me know down in the comments below. And remember, check out the newsletter, check out the podcast. All links will be in the bio. And I really appreciate you hanging out with us. Make sure to check out the Discord. And I hope you enjoy the rest of your evening.